All right. Good morning, good afternoon, good evening. It is Thursday, the 8th of February. Awesome, awesome, awesome. Uh, let's see. Let me share screen number 3. Okay, so you should be able to hear me, see me. Bring up the calendar. Calendar is very, very light. I think we have a speech in the where are we? Right around here. Got a couple of speeches. So we had to be on the lookout for this. A couple of bill auctions to look out for. And this one here will probably be a big mover. So keep an eye open for that if you're still trading at 1 o'clock Eastern time. Okay, so let's go take a look at our daily chart, which is something we do daily. Looking at today versus yesterday, we have a higher high. We have a lower low. It's a red candle. Clearly, it's an outside range, bearish. And if we zoom into this, we'll see the low came in recently, right? So if we go down to an hourly and start highlighting our risk, we clearly have a floor below us an hour ago. We clearly have a ceiling above us a few hours ago. And now we're trapped in that range, right? It so happens to be an outside range. And depending on how you draw your lines and stuff, this was broken hours ago. And this was tested in the night. Right, so let's zoom into this on a 5 minutes. Right, and so on the 5 minute, in the vicinity, you can see a lower low, you can see a higher high. It's another one of our famous outside ranges, traders' worst enemy. And with that in mind, we have to assume we've been testing support, looking left. We've been testing this area here, and that area seems to be holding because the price is moving up from here, right? And so keeping that thread going, if this is higher highs and higher lows on the current move, let's assume this is the way we need to keep trading. We found support, we tested support, support held, we're making higher highs and higher lows. If that's the case, right around here, I want to be buying at support. And so if this is my first trade of the day in this box right here, I'm buying on the red candle, I'm buying at support, I'm testing what I think is support. My assumption, if it is correct, will give me a little bit of money. If my assumption is flawed or wrong or low probability, maybe it drifts lower and it gives me an opportunity to buy a little bit more. Right? So let's keep that mindset going, right? We have higher highs, higher lows. I'm at support as we speak, and I'm taking a buy. Right? So now I have 2 trades, the average of which is right there in front of me, like within 1 bar away. If I can get above that white line, I'm already in the money. These trades were from time I spent with another student an hour ago. Okay, so here we are testing support, our assumption of support, what we think is support. Right? And so I'm just buying this. Now I have 3 clicks in box number 1. This is my box number 1 because that's where I'm spending my money, right? The other boxes are just there to help me measure the move. The current move has gone up from the low 3 boxes, or it's actually 2.5. 1, 2.5. Right, so ideally, because we're pushing away from support and pushing higher highs, higher lows, that's kind of what we're hoping to sustain. That's what we're hoping to, build upon. Where's the ultimate target? How far can this go? Right, so let's go take a look at the daily candle again and measure the daily candle. How much have we done today? Right, so from tip to tip, we've moved 46 pips. An average day is in the neighborhood of 69 pips. We're missing pips, right? This is not an average day. And speaking of which, the last 3 days have been less than average, right? Less than the average of 14. And so it feels as though it's like a jack in the box. We've been winding up and winding up and winding up, getting tighter and tighter and tighter. What if it is coming out of the box, like reaching for the full average? Well, a full average from the low can take us right around here, 8,100. A full average lower from the high can take us to about 7,100. Right, so we have a destination. Either we keep going lower, which would be in line with the trend, or we continue in a counter trend fashion and retrace some of this bigger swing right here. Right, so as we've been holding the lows and making higher highs, just recently making a lower low, we have to assume this is holding and we're going up. And it's only an assumption, right? It's only because I'm here for a couple hours each day. I'm not really looking forward to tomorrow yet, right? I don't care what tomorrow's candle will look like until I come tomorrow, right? So I'm only here to see what today might end up looking like. And because I'm here for 1 to 2 hours at a time, I'm only trying to see the next 1 to 2 hours, right? And I've been buying support because I think this green candle right here is only the beginning of more green candles, right? So if we go back to our 5 minutes and now start drawing that ladder that, I speak about every day. One level will be here. And then using our mind's eye, maybe there's one here. I'm just looking to see where I can connect the dots. Right? It's very rough. It's more like an art. It's really not a science at this point. Right? I'm just trying to see average moves where the market has been finding support and or resistance on its own. And I'm just highlighting those levels. And these levels end up building a ladder, and the ladder, we end up going through it over time. And so each rung of the ladder gives us an opportunity to ask questions. Do we want to stay? Do we want to play? What do we want to do here? And if it gets to the next one and the next one and the next one, right? We ask ourselves the same questions over and over and over and over. Right? So these are static. They don't move. The price is moving to and from the line. And so in order to make things a little bit more useful, we take that unit of measure, average, we make it into a box. And now this box is dynamic, like a measuring cup in your kitchen. Right? You don't change the measuring cups, you change the size of the recipes. Right? So this is my measuring cup, and today's recipe or today's swing has been 2.5 cups. Right? If I'm expecting further expansion on this leg, more bullishness, I'm expecting to be maybe stacking more cups, more boxes. Right. This is an opportunity to buy right here. Right. The edges of the two boxes clearly support. Right. So there's that fourth click that belongs in this box. Right. And now if I'm taken down into this lower box, box number 2, and that's box number 2 from where I started trading. Here I am afforded the opportunity to put in 4 more clicks, right? In this box here. In this box here, I have 4 clicks to spend. Right? So it's a matter of slowing down, spending the money you have access to, building the position that you're looking to build, ultimately with one outcome in mind, right? So I'm layering my risk. Ultimately, the goal is higher high, right? I'm thinking I want to close these trades somewhere up here. And as the price is moving up, I can keep buying support. I can keep testing and buying support right here. We'll know in a few minutes if this is the high and this is a low, or if we're making a lower low and therefore making another outside range. Right? We have to see what happens here. The ladder on the rung on the ladder. Ultimately, the market is bearish, right? We can't deny the fact that days upon days upon days it's been going down. These last few days, things have been winding up, like I suggested earlier, like a jack in the box. Right. So the last few days, we've really haven't done anything. And we know where we're coming from. And I've been personally playing for a move back up. I've been playing for a pullback somewhere in the neighborhood of 50%. In the course of the night, the market did pull back to 38% and has moved away from that 38% ever since. Right? I've been playing the long side off of 61 pretty much all week. Right? So by defining the risk, by defining the floor, the ceiling, and then the rungs in between the floor and the ceiling, such as right here, right now, right? I want to buy this right here. Right? And because I'm in my second box, I'm putting the money that's allotted for this. Right? It's been allocated for this task. Now, if we think this is a top temporarily, let's put the box on that top and let's measure this current down leg, what's happening now, what's unfolding in front of us as we speak, has moved 1 and a third standard deviation, right? If we're looking left, it did not go to the south pole, but instead went to support, right? And we have further support to test and even further support to test into, right? We keep finding more and more and more support to test. Eventually, we run out of money. This is why we only allocate so many clicks per boxes, right? Otherwise, the opportunities are endless, and you're just going to click your little heart out before you realize you're broke, right? So this is looking scary because we're in the midst of a downtrend. I'm trying to play a retracement, which failed a few minutes ago, about an hour ago. And now I'm retesting support, thinking that we're going to give it another shot. And really that second shot is what I'm targeting, right? So this idea that we play for the next move, well, this is the current move right here. I'm hoping to make my money on the next move, right? So I'm building a position, hoping to get paid when we find support and support holds, right? So if support does not hold, I start to expand on the drawdown, right? I start to get deeper and deeper and deeper into the red. And that is not a problem, right? This is why we allocate 4 boxes of this risk, right? I'm willing, able, capable of adding to my position, right? I'm building a position and I'm willing to do so all the way to here, right? And if I don't find the move I'm looking for, I start to lose 1 trade at a time as the market keeps pushing further and further, right? So I'm afforded the opportunity to keep trying. Okay, so this is what we see here, a little bit of a bounce off of support. Right? And because of our approach on schedule, my approach on time at 8 o'clock, I'm building a position in a pullback, which I expect to be here on schedule. It's part of the game. It's part of my plan, part of the strategy that I exploit. And then the pullback that should be on schedule, about 13 minutes from now, right? I'm hoping to have found the bottom of that box within the next 13 minutes and start to go back up. Maybe it's happening now. We'll see. Right. Ideally, I want to close what we've opened, about 9 trades so far in the next 30 minutes or so. Okay. So if I can, in the course of the day, if I can start to sell somewhere the 08, 800 level, so up here someplace, that'd be awesome. Right? But will it get there? That's the other question, right? Overwhelming, the bias is bearish. And here I am trying to test the waters in the opposite direction. Right? So let's be careful. Let's keep our head on the swivel and watch your 6 o'clock. Right? Slow is smooth, smooth is fast. There's no rush. And we're trying to repeat or at least rerun what yesterday gave us. It'd be kind of neat to see a replay of yesterday on schedule. The premise is this higher high. This should provide the move we're looking for as long as we get a higher low. And that seems to be happening right now. Right. So we are structuring ourselves, or I'm structuring myself to capture a higher low, right? Anything above this level here. So there we are, closing some trades. So assuming this might be a low, I can put my measuring cup on that low right here, right now. I can reset this measuring device and watch the price in this current box try to escape this current box, right? I'm thinking it will try to come out at the top. And when it does so, I'll be able to catch it with this. If it breaks at the bottom, I'll catch it with this. And that affords me another 4 or 5 clicks. We look at the calendar, I think we had a speech scheduled for a couple hours from now, a Fed speaker, right? So we have to keep that stuff in mind. Otherwise, it's pretty clear sailing, right? We're just trading flow. Open my window. Ooh, let's get warm in here. All right, so back to support. I'll take a trade right there. 1, 2, actually. All right, I'm in 2 boxes, so I'm running with 8 clicks. If I can get into box number 3, that will bring me up to 12 clicks. And if I'm forced into box number 4, that'll bring me up to 16 clicks. A lot of the moves, actually, let's bring that into view. A lot of the moves that we're experiencing are a result of this, right? The 10-year bond is moving, the 10-year treasuries are moving, 10-year yields are moving, but we are at resistance, expecting a break, right? So that's kind of the idea. I'm expecting a little bit of a pullback. That's how I'm going to make my money before we have the break, right? So this little bit of a pullback right here on the dollar index is affording us the opportunity to go long the euro, right? Ultimately, this should break. And that's when we want to be short the euro, right? So we're getting ready for the next move, right? The next move is a drop from higher. Ultimately, I'm thinking something like this, right? But we have to get there, right? We have to get there. Right? And that takes 2 to tango. And so I may be totally wrong. And whomever's on the opposite side of my trade would be right. So good luck to you guys. Let's pick a side and dig your heels in. Be committed to your bias until your bias is clearly proven to be wrong. And by using probabilities, you have an opportunity to fight until you can't fight anymore, right? So you have this ability to survive moves that are slightly bigger than normal, or take advantage of moves that are clearly smaller than normal, right? So it's all about sizing up what's happening. Does it fit in my probability? Is it something I want to take part in? And then if this fits what I'm trying to do and it's at the right level that makes sense to me, why not take a trade? Right? So I can't afford anymore. And so now I'll have no choice now but to wait if we come into box number 3. And that's box number 3 from the top. Right? So you'll notice I keep moving the boxes because they're just there to help me measure things. Is this support that we found? We'll know in a minute. Giving up is usually the worst thing to do, and we tend to give up at the worst possible time, just before we find success. And so this method here allows us to keep on trying. It allows you to make mistakes and yet make money at the same time. It allows you to test an assumption, be wrong with your assumption, and test it again and again and again. And eventually all your assumptions might be right in the end. Right? So it's having this big picture in mind, trying to fulfill it with baby steps. And ultimately, you know where you're wrong and you know when you must quit. And for us, that's down here, box number 4. Right? We know when things are not working well. Otherwise, we have no or less worries. I don't want to say no worries, but we have less worries than most. We're trading probabilities, not random stuff. We're trying to avoid random stuff like news events. Right? So we're playing for bullishness in a bearish market. And it's temporary. It's only for today because it's what today calls for. That's it. If I'd shown up hours earlier, I probably would have been a bear. All right, so let's see if we can survive this current box right here, closing all of our trades and enabling us to, call it a day. Those of us that will be forward testing all day, trading all day, ultimately you want to be selling as we approach 08. Right? Any kind of higher highs on the daily candle will become a selling opportunity, right? This is not going to the moon, even though it's looking green and looking bullish, right? Keeping things into context, so to speak, the time frame is really relevant here, right? On my 1-minute chart, I'm playing bullish for the time being. Ultimately, I want to be a bear. I want to be in line with the tide, the overwhelming, direction of the market. I just don't want to, I don't want to be too early and yet too late. And this is why the 4 boxes gives me enough space, i.e. time, to catch the move I'm trying to catch. This. Okay, so going back to our 5 minutes, just to check on the ladder that we drew earlier. Right, we have visited 3 rungs, and we're trying to go back up. Right, so at this level right here, right now, we are at a rung on the ladder. This would be a place to ask yourself, do you want to add to your winners if you're winning? Do you want to close some of your winners if you're winning? Do you want to reverse stuff? Right? These are the questions you ask yourself at these levels. And as we're pushing away from that level, the next one becomes the highlight. Right? And here we are, closing some more winners. If it retraces here, I'll recycle those trades that just closed, right? Red candle, right? So, boom. If I can see another one, boom. I'm at 6 open trades, so I have to slow down. Right? I don't want to go too heavy. I'm only in 1 box here. Right? So let's close some trades before I reopen some trades. Okay. If you can afford it, right around here would be a good buy. And so assuming this was a low, let's put the box on the low. Let's measure the current move up. The current move up broke into the upper box and retraced into the lower box. Right here, right now, I'd buy that. Right, I'm buying box number 2. It's right on the threshold. What news just came up? Natural gas. All right, so we're trying to see if we can find support in this zone here, in this area. Maybe it's around here. All these wicks there. Right, that would enable us to spend a little bit of money, bringing the white line down, engineering our exit. Here's another. Right, on the bigger scale, on the bigger picture, on the daily, it's bearish, and we are playing the long side because we've been pushing off of the lows since I came on schedule. Right, we have to be aware of the bearishness. We're fighting the tide, right? We're going against the dominant bias. It's based on the time of day and the level that I started with. If I'd started at the top on the red candle, I'd probably be selling it. Right, so always envision the end of your trading session. Right, I'm not here for 24 hours. I'm only here for 2 or 3, maybe 1 hour candlesticks. And so I'm just trying to find support with this current candlesticks because I envision this to be bullish. And so if I'm building a position on this candlestick, maybe I'm going to get paid in the next hour. Let me close my window. Go. And stuff like that. So the recycling is really what we're into. The opportunities are always there. Sometimes they're just not worth it. The size of the bars are shrinking. It looks really appealing, but it's still a bad idea. It's like cheating on your diet, right? You shouldn't be doing it. And so time of day is really important here. Right? We don't want to ignore the fact that the bars are shrinking. If you're trading in a shrinking environment, you're just asking for trouble, right? Eventually it shrinks too much and then there's no coming out of there. It's like a Venus flytrap. Oh yeah, it's what we want. A retest of the highs. Right? The speeches that we have on the forefront, where is it? It is right now 8:34. So Lane just finished speaking or is currently speaking. And then we have a couple of bill auctions in 1 hour from now. Then we have these guys, Mr. Barkin. That will probably be impactful to us. So will the bond auction. Right? So there's lots of reasons to see volatility. It's just outside of our 2 hour window. Right? That doesn't mean it's not going to be impactful. What we're learning to do is exploiting the same market or a similar market every day. If I try to reinvent my wheel, I reinvent my results. I don't want that. This right here, if you can afford to, take a buy, recycle a couple of close trades. It'd be awesome if we could see a higher high on the day. Just waiting to close some trades so I can recycle some trades. All right, my 5-minute chart, we're at that rung on our ladder. It seems to be holding us up. Right? We know we need to break through this before we can even envision making a new high on the day. Let's just watch. If you have the money to spend, you're at support right now. Right? The scary part is when you're piling on boxes, when you're into box 2, and now you're committing to box 3, therefore you're committed to box 4. When things are in box 4 and now stress is increasing, anxiety is increasing, it becomes that much more, it's that much more important that we focus on the actual process and not deviate from the plan. Plan A, plan B, plan C. Execution is the key here. Right. So we're trying to control this, the space between the current price and break even. In my case, is 7 pips. Right. So that's less than 1 standard deviation. If the low fails, if we do make a lower low on the day, then it opens the door to the 600s. If you can take a trade right here, if you can afford to take the trade, take it. I'm waiting for box number 3, because I've already spent the clicks that I can afford to. I'm not giving up on the bias. I'm just slowing down the clicking so that I can spread my risk as evenly as I possibly can through my boxes. Right? This is allocated for this job. And so I just want to spread it over time. I don't want to have it all bunched up in one spot. What we're trying to do here can be referred to as anti-martingale. It's layers and layers and layers of even amounts of risk. Right here. So we're building a position. And ultimately, we should get paid in about 20 minutes to half an hour. Right? That's the goal. That's the intent behind all of this. Right? We are buying on the way down so that we can get paid on the way back up. We're using time of day to help position ourselves and build the position. Right? And then with this comes a whole bunch of other circadian events, like the banks closing, banks opening, stock exchanges closing and opening. Right? These are all on schedule. So is the calendar and its events. So a lot of this stuff is unavoidable. It's predictable, right? The calendar is published a year in advance. You just have to be willing to participate with a plan. So let's get paid and get out of here. If the bottom falls out, we start to book losses one box at a time. The system is not infallible. We've tested support as price was falling. And ideally, we want to get paid for this work. The sooner, the better. And so doing it at the right time of day enables bars that are big enough so you don't end up waiting for, hours for 3 pips. If I end up over trading, and so I end up opening trades, in the American afternoon, I end up holding on to those trades, very likely into the Asia section. Right. So it's all about limiting my exposure using the clock on the wall. All right. So here we have an opportunity to recycle if we see a red candle. Right. The patience runs thin when the market takes hours to give you 3 pips. And then the minute you close your trade, it tends to go your way. And the psychology of the loss is what has us all twisted into a pretzel. Just let it be. There's a red candle. I'll take one click right there. And just recycling that trade. And we can see within an hour or so, we tend to have a pretty good idea what kind of trouble we're in, if any. Right. So I came in at 8 on my clock. By 9 o'clock on my clock, I'll have a pretty good idea if I'm in trouble or if I'm on my way to the beach. Right. If I'm in trouble, it's a matter of solutioning, right? Finding an exit, engineering the exit. It does not have to be closing everything at once. Right. So maybe if I'm in trouble, I can close 1 or 2, the most troublesome trades and keep on trading. Right? It's a management game. Right? So here we are trying to recycle another. Come on. A little push higher would be nice. In the next 45 minutes or so, if we can revisit the next 9 pips, I'd be happy with that. Let's keep it. Red candle, recycle. Remember where the low is. That defines your risk for today, considering we are bullish. If you feel compelled to, take your losses below the low, it wouldn't be a bad idea. It'd be a good place for it. It's the proof in the pudding, right? Especially if you're competing with the clock, right? If you're running out of time, book your losses. They're only going to get worse. In our brain, we think they're only going to get better, right? We pray, we hope. There's the red candle, but I've already clicked on it. So I have to wait. Opportunities are everywhere. Right. We just want to see this next 9 pips. Then we can call it a day. Call it a recorded session. What do we have on the calendar for tomorrow? Canadian news, another speech. Well, rate count. So light day tomorrow. Lots of German news this evening. Important German news. Right. Patience, patience. If you can take a click, take it. If you're like me, you're sitting on your hands because you've already clicked all of your monies away, and now you're waiting to see if you can get paid. We've postponed gratification. I'm sure by now you've noticed the market uses time to get under your skin, right? You have the best plan, but it's taking so long to unfold. And now in that time, your brain is running wild and you eventually give up on your good plan, probably at the worst possible time, just before it, executes. And so this idea of having an upper and lower limit and then using a start time and an end time, it puts your behavior in a box. That box has to be, obeyed as much as possible. You have to do the right things on 3 of those 4 sides. One of the 4 sides is the past, so it's a clue, right? But the rest of it has to do with the facts. And so we are forecasting the future based on the facts that we have in front of us. And if you try to forecast too far into the future, your probabilities start to slip away. You become wrong faster. So we learn to limit our forecasting to 1 or 2 boxes at a time, 1 or 2 hourly candles, and make your money inside of that space. The challenge is admitting defeat. When it goes into box number 4 and goes into box number 5, it's been upside down for 5 standard deviations. There are clues along the way. Right? There's a clue right here. Right? What do we want to do at these rungs? Right? So we've traveled on our ladder. We've traveled between these 3 rungs since we've been trading as a group this morning. Right? What are our expectations? Are we going up the ladder or going back down the ladder? Right? That's the $1 million question. Right? The ladder offers you an opportunity to make a decision every 9 pips or so. That just so happens to be the average, distance. It also happens to be the average box that we're using. Right? So on one side, things are static. They don't move that much. We're watching the price move. And on this side, our approach is dynamic because we can make the assumptions and then test our assumptions based on what we perceive to be a fact, and so, or an assumption for that matter. If I'm assuming this is a low, I'm now trading in this box until we break out of that box, above or below, or in time. Right? So the positioning, the security blanket, the feeling that the box gives me is what I'm exploiting. I have a job to do here. I have a job to do here, and I have a job to do there. And over time, you get to realize that that job is the same over and over and over and over. And so now we've built consistency in the system because of this box and its 3 edges. All right. We've built our position. Let's see if we can get paid for this work. All right, we got about 10 minutes or so. Then I have to let you go. Nonetheless, we have a plan of action. We know how to deal with the future. Good, bad, or indifferent. Let's reopen this if I can. I need to see a red or a wick or some kind of rejection here. I want to buy cheap. Oh, there's a red candle. It took 1, 2, 3. I just recycled the trades that closed a few minutes ago. And I'll put my new box on what I perceive to be a breakout in the making. And then we wait. Breakout in the making. All right, so looking at our ladder, We're going back up the ladder. Right? Are we leaving this particular wrong right here? Are we leaving this behind? Right? If the answer is yes, then this becomes the target. Right? If it's just holding us up, temporarily and we fail, we're coming back down. Right? We're just trying to keep things really, really simple without having our brain run amok, because otherwise your brain will have you thinking green, green, green is pointing to the North Pole and red, red, red is pointing to the South Pole. And in reality, it's only going to support or resistance. Right? So by looking at support and or resistance, you're keeping grounded. You're staying logical, Mr. Spock. Right? This is what trading stick shift looks like. Nothing automatic here. Everything's done, by hand. Right, there we are. We just want to close these remaining trades and call it a day. Couple more minutes. And then ultimately, if you are forward testing the strategy for a few more hours, you want to be sellers if you make a higher high on the day. Right? So you want to sell the higher high and anything higher than that, ultimately for the next 4 boxes. Right? Remember, it is a bearish outside day as of this morning. And so testing the upper end of the range, not out of the question, but anything higher than that would be questionable and something worth selling. Right, so just to reiterate, if we get up here and test stuff up here, sell that stuff. So recycle a couple of trades, red candle, boom, boom, right there. 3 and 4. And now we're expecting, because we're in this current box right here, the expectations are that we remain in the current box and the price should slowly find its way over here. Right? It can come anywhere. The price can go straight up. It can find its, it can find its footings and just go sideways and do nothing and exit over here, or it could just fail and come right back down again. Right? But our expectations are that it ends up over there in the next 60 bars. Right? So we have a probability and we trade the facts that unfold. Right? The plan is one thing, the facts are something else. The facts allow you to fix your plan, adjust your plan, work the plan. Right? So another thing to keep in mind is the current price right here broke out of the box with time remaining or unused time right here. That unused time tends to, so there's a higher probability that we get this unused time in pips. Right? So it's this exchange of time for money or money for time. this unused time, the time that we did not spend in the box, there's a probability that we spend it in moving upwards instead. So let's see what happens next. Gonna have to let you go in a couple of minutes here. I have to go and meet with someone. We have our plan of action, right? As soon as these open trades close, I'll take a picture and put that into the video. But for now, I'm gonna leave you be with the current action plan, right? Remain bullish until we revisit 08 or thereabouts, and then become a seller, right? So anything higher than the high you want to sell into. Ultimately, these open trades right here, right now, should close by themselves. And if they don't, then you're going to be tapped out 36 pips from here. Okay, so don't touch your stop losses, don't touch your targets. Just let the plan play out and realize that the market will use time to get under your skin, right? So if it's not giving you the 3 pips that you want immediately, that doesn't mean it's never coming, right? Just stick to the plan. All right, I'll let you guys go, and I see you tomorrow for more winners. Enjoy yourselves. Thank you. Bye-bye. Trade safe, everybody. Oh, there we are, closing winners.